Good morning and welcome. It's a Tuesday morning, of course, and we're at the start of trade again. But before that, let's see how markets have opened on Monday, and I speak about global markets. So, Ankita, talk to us about. Firstly, wishing you a very good morning, and talk to us about how global markets have fared.
Good morning, Harsh. Now, global markets fell for second consecutive day for the week. Yesterday, the US markets closed lower as bond yields rose, pressuring the growth stocks. And the yield on 10-year Treasury was up nearly 12 bips at 3.6%. And Monday marked the first time it rose above 3.6% since January 11th. And the 2-year Treasury yield was trading at 4.4% after climbing more than 80 basis points. And the Dow Jones Industrial Average dipped 34 points, falling for its third consecutive session. The S&P 500 slid 0.6% or 25 points in trade, and Nasdaq Composite dropped a good 1% in trade. Now, the stock futures rose slightly in the overnight trading as investors are bracing themselves for the latest commentary that's due as of today from the Federal Reserve Chair Jerome Powell. So all eyes will be on Jerome Powell for today's commentary. Now, investors will also monitor international trade and consumer credit data that is likely to come out of the US in today's trading session, that is tonight. So we will be giving you the data tomorrow morning in today's show. Now, European markets closed on a negative note as well. DAX was down 130 points. FTSE was down 85 points, 0.8%, and Stock 600 was down 0.7% in trade. So that was the roundup of the global markets, everything in the red. What about crude, Harsh? How's the crude faring?
Well, yes, we're seeing a few gains on crude, Ankita. We're seeing crude around 1% higher in early trade today as well as in trade yesterday. So we saw a bit of a battering of crude through the weekend or just before Monday morning started. And that was on the back of course, the better than expected employment numbers that came in the US. So just to give context, that means that the Fed still had some opportunity to increase rates going forward, some opportunity, and of course focus and prioritize on the inflation rather than on the economy, which meant that there could be a depressed demand, and depressed demand means that supply is more than demand, which means that prices will fall. And that's what happened to oil yesterday. Moving on to what's happened today, there's been a renewed encouraged push with regard to the China demand, the demand coming out of China for oil, and that means that oil saw a bit of an uptick. The other piece that also impacted crude yesterday and over the weekend was that the dollar index gained, the acceleration in the dollar index came through. And that was all obviously because a rate hike was on the anvil, which meant that the US 10-year bond yield went up, which meant that the dollar demand went up. So the dollar became stronger, which meant that oil became weaker. So we've seen the dollar now, roughly at the 103.5 mark, 103.5. So it's stabilized there, which means that oil can again start to inch higher because the dollar is not inching higher. So we're seeing a couple of those factors play out in crude at the moment. But let's quickly take it to the events to watch out for in trade today. Ankita takes that one.
Well, thank you for the roundup, Harsh. Let's quickly look at the events that you need to watch out for today. Now, we are in the thick of earnings season, and we have a couple of earnings that are coming out today. Very important earnings. Adani Ports is out today, so do keep an eye out on that. We have Bharti Airtel also and Hero MotoCorp that will be coming out with their earnings, and a couple of other earnings that are not from the Nifty 50 companies, but people will be watching out for that as well. We also have the India Energy Week that kickstarts in Bangalore today, so all eyes out on that. And of course, the very important Fed chair who will be giving out his speech in today's trading session in the US, Jerome Powell's. All eyes on that as well.
Well, yes, thank you so much for that roundup, Ankita. And we'll move straight to global news. A powerful 7.8 magnitude earthquake rocked wide swathes of Turkey and neighboring Syria. The earthquake killed more than 3,400 people and injured thousands more as it toppled thousands of buildings and trapped residents under mounds of rubble. Authorities feared the death toll would keep climbing as rescuers searched for survivors. Tens of thousands who were left homeless in Turkey and Syria faced a night in the cold.
Treasury Secretary Janet Yellen said that the US government risks economic and financial catastrophe if the House fails to pass a bill to raise the $31 trillion debt ceiling. The nation hit the statutory limit last month, but Republican members of Congress are holding out on raising it. The Treasury Department under Yellen has taken several temporary measures to help the government avoid default.
Well, I'm switching over from politics. We'll go to Dell. Dell has announced plans to lay off 5% of its workforce now, and that accumulates to 6,650 employees. The cuts at Dell come as demand for PCs and laptops has slowed globally. Global shipments of PCs were down 28% year over year in the fourth quarter of 2022 calendar year.
And Google announced an artificial intelligence chatbot technology called Bard that the company will begin rolling out in the coming weeks. Microsoft, meanwhile, said it's planned its own AI reveal today. The company is also adding the technology behind Bard to the Google search engine to enable complex queries.
Well, and Binance, the world's largest crypto exchange, will suspend US dollar deposits and withdrawals. The company did not provide a reason for the decision in its announcement, but Binance's net US dollar outflow represents a tiny amount of money for a company that has $42.2 billion worth of crypto assets.
And Chinese Ministry of Foreign Affairs spokesperson urged both sides to remain calm after the US said it shot down what it called a Chinese spy balloon. China has called the balloon a civilian unmanned airship and said it was primarily conducting weather research before it was blown off course.
Yes, but at Times Network, we're always looking to create investor awareness and make financial matters simpler for you, our viewers. Keeping up with our values, we present the second season of Nivesh Ke Funde. On this edition, we discuss saving and investing, which are both important concepts for building a sound financial foundation. Take a look.
Hello and welcome to another edition of Nivesh Ke Funde. Today we will talk about something that is at the foundation of a person's personal finance journey.
That's right. We're going to look at the savings and investments and the different roles they play in a person's financial portfolio.
Let's start with savings. It's when we keep aside money for an emergency that we can have easy access to. So basically, savings has high liquidity.
Investing on one hand is using money to get some assets that we hope will grow in future, thus helping us grow our wealth.
Well, under the heading of investing, there are a number of different assets that a person can explore, which provide varying levels of returns along with different levels of risk involved as well.
Yes, so investors can pick and choose the investment options that are in line with their risk and reward appetite, and most importantly, their time horizons. So if someone wishes to invest for a short to medium term duration, they can invest in debt mutual funds, and someone who's looking to invest for a longer time horizon in a higher risk product with relatively higher returns expectation, they can invest in equity mutual funds.
And there are many options that would be suitable to persons' varying requirements, and the best part is that people can now invest as low as rupees 100 per month through different mutual funds.
Another point in managing your personal finances is that a person should be disciplined. Being disciplined with savings and investments is important, and through mutual funds, this discipline is made easy as a person just has to opt for a SIP or a systematic investment plan.
Absolutely, and with the SIP, an amount that is decided by the investor is invested at a time fixed by the investor in a mutual fund picked by the investor himself. So in this way, the investor gets full freedom to choose their investment journey as well.
That's all on this edition of Nivesh Ke Funde. Hope we've been able to explain the difference between savings and investments for you. Stay tuned for more such investment insights only on ET Now.
Good morning and welcome back. You're watching Market Cafe on ET Now. Now, of course, there was the budget which came out on last week, rather, and we had the finance minister speaking to us about what the plans for FY24 are. And we are now onto a mega ET Now exclusive. The finance minister Nirmala Sitharaman tells your channel's managing editor Nikunj Dalmia how the finance ministry is dealing with the Adani Hindenburg saga and what can taxpayers expect this government to do going forward if elected again. Listen in to that conversation.
I think the regulators in India are very well specialized in their areas. In the last few decades, the lessons learned by each one of them and the newer institutions which have come in the process through the legislative processes itself are very capable and match their peers elsewhere. I will not buy for a moment anyone saying Indian governance or that which you referred earlier, the governance or their regulatory mechanisms are not good enough. Not at all. In fact, in very many areas, we seem to be leading the way in terms of good governance. That's not to say that everything is all good about everybody, but I'm confident that the Indian regulators are well seized of what they have to do, and they will do the needful where and when necessary. I take the example of RBI, for instance. Most often people say, oh, no, the regulation work will have to be done better. Look at what happened. In 2019, matter of fact, repeatedly I used to receive calls from, are you sure there won't be any more NBFC collapse? Are you sure there won't be any banks collapse? But even in that one particular case, the RBI stood in time to set the matters right. So I think we all should see our regulators with due respects, without cynicism. They are world class. They will do their job.
But, Madam Minister, the sell of an Adani group of stocks has led to extraordinary volatility in the market. And the regulator's job and the government's job is to curb the market volatility. Given that this kind of an extraordinary volatility could be repeated, is there case in revisiting the way how FIs invest and trade in India?
Well, I think the SEBI should be given a time to, come up clearly on understanding how this happened, what has actually happened. Okay, if I say this, people would say, oh, don't you know what's happened? Yes, we all know. But when I say what has happened, I'm saying it in a lot more deeper sense. I think it's now time for them to get a comprehensive picture, and I'm sure they would do it, and then maybe address issues that you're raising.
The government is very keen to push the new tax regime. Is there anecdotal data which the government has which indicates that if you take the exemptions out of the total tax system, it will stop revenue leakage? Because that is something which you referred to at the beginning of our interaction, that the government is consciously working towards plugging revenue leakage.
No, the new tax regime was brought in more because we want a simplified tax regime. And a simplified tax regime with, let's say, a bit of a favorable tax slabs. Are you trying to close all the exemptions given? No. Those exemptions will last as long as people have availed of it, as long as there are people availing of it. But it's also in the interest of all of us to have the new regime, which has been, in the sense, simplified and with reasonable tax rates, has been a recommendation of very many committees. So the new regime will have to be made attractive enough for people to move there. And at this stage, we are more looking at people in the middle class who need that kind of a simplified, reasonable rate of tax regime. That's why we have to make that attractive. But it is not being made attractive at the cost of the old regime. That's available. Those who want to be there can very well be there.
So future budgets, will there be more incentive given to the new tax regime?
We'll have to see as we go. But we expect a good number to move now into this.
Well, that was our managing editor with the FM. Do tune in to the full interview with the finance minister. Now, moving on, after Apple manufacturing in India, the latest one is coming in from Samsung. In a major push to make in India mission global, smartphone maker Samsung has decided to manufacture its premium smartphone S series in India from its Noida facility. To know more about this, ET Now's Sameer Dikshit spoke with Samsung Mobile's business head Raju Pullan. Listen in to what he had to say.
I'm very happy to share with you that we launched the ES23 on the 2nd of February, right? Okay. And since then, in the last 24 hours, we have achieved a fantastic number of pre-booking, and that shows the confidence about the flagship Samsung smartphones that is there, and that has actually inspired us to move to have the production of all our flagships in India. And the S23 is manufactured and will be manufactured, is made in India, made for India. And the good news is that the Fold and the Flip series as well, since last quarter, is also being manufactured in India. India is premiumizing, and India is a very large market. We've got almost 650 million consumers, which is an installed base of smartphones in India. These consumers will aspire to upgrade, and that is the conviction with which we come in with a very strong commitment of made in India and make for India.
I would also like to understand that what could be the production capacity, seeking the demand side, that you are looking forward. And secondly, will it be specifically for Indian market that manufacturing the decision has been taken, or will you look to export as well?
So Samir, a great question. So in the first 24 hours of the launch of the S23 device, we have done a pre-booking of almost 140,000 smartphones within 24 hours, which is almost 1,400 crores worth mobile phones have been pre-booked even before the launch within 24 hours, which is almost 2x of what we did with S22, which also goes to say that we will continue our India commitment. We will continue to ensure that we expand our operations in India.
Well, from Samsung to really what is relevant for you, investing. At Times Network, we're always looking to create investor awareness and make financial matters simpler for our viewers. Keep up with our values. We present the second season of Nivesh Ke Funde. On this edition, we discuss India's economic growth, how that can benefit you. Listen in to this piece.
Hello and welcome to yet another edition of Nivesh Ke Funde. I'm Ajay Sharma. Now it's a well-known fact that India's economy is on a very strong growth trajectory.
Yes, Ajaya. In fact, India is considered the fastest growing emerging economy across the world.
But Kavita, how can the everyday Indian be a part of this growth story? And what are some of the avenues that they can explore?
Now, one of the relatively easier and simpler ways to do this is to invest through mutual funds.
Absolutely, mutual funds provide the investor an avenue to invest in multiple asset classes.
Yes, Ajaya. Through mutual funds, an investor can get access to equity of shares of the Indian stock market as well as global stock market.
Not just equity, they can invest in bonds and debt market and even invest in gold and silver through the mutual fund route.
Right. One more thing, Ajaya. By investing through mutual funds, a person can invest in small denomination and does not have to make large investments at one go.
Yes, this helps the investor continue their investment at regular intervals for a long duration of time. Additionally, when a person needs money, they can redeem the mutual funds unit worth the amount they require easily.
Absolutely. One does not have to sell the entire investment. Thus, one gets the benefits of liquidity and flexibility also.
So if you believe in India's growth story, make sure you're a part of it, and the easy way to do that is by investing in mutual funds.
And with that, that's all on this edition of Nivesh Ke Fun Day. Thank you for watching.
And once again, we'll focus on you, the investor. And at Times Network, we're always looking to create investor awareness, making financial matters simpler for you, our viewers. Keep up with our values, of course, and in doing so, what we're going to do is present the second season of Nivesh Ke Fun Day, as we have been through this show. And on this edition, we discuss saving and investing, which are both extremely important concepts for building a sound financial foundation, as well as, of course, building wealth. Take a look at this one.
Hello and welcome to another edition of Nivesh Ke Fun Day. Today we will talk about something that is at the foundation of a person's personal finance journey.
That's right. We're going to look at the savings and investments and the different roles they play in a person's financial portfolio.
Let's start with savings. It's when we keep aside money for an emergency that we can have easy access to. So basically, savings has high liquidity.
Investing on one hand is using money to get some assets that we hope will grow in future, thus helping us grow our wealth.
Well, under the heading of investing, there are a number of different assets that a person can explore, which provide varying levels of returns along with different levels of risk involved as well.
Yes, so investors can pick and choose the investment options that are in line with their risk and reward appetite, and most importantly, their time horizons. So if someone wishes to invest for a short to medium-term duration, they can invest in debt mutual funds, and someone who's looking to invest for a longer time horizon in a higher risk product with relatively higher returns expectation, they can invest in equity mutual funds.
And there are many options that would be suitable to persons' varying requirements, and the best part is that people can now invest as low as ₹100 per month through different mutual funds.
Another point in managing your personal finances is that a person should be disciplined. Being disciplined with savings and investments is important. And through mutual funds, this discipline is made easy, as a person just has to opt for a SIP or a systematic investment plan.
Absolutely, and with the SIP, an amount that is decided by the investor is invested at a time fixed by the investor in a mutual fund picked by the investor himself. So in this way, the investor gets full freedom to choose their investment journey as well.
That's all on this edition of Nivesh Ke Fun Day. Hope we've been able to explain the difference between savings and investments for you. Stay tuned for more such investment insights only on ET Now.
Welcome back. Here watching Market Cafe, and it is that time of the show when we go more stock specific, and we have Vamakshi with us in the studio. Vamakshi, good morning. So tell us, what are the stocks that we need to watch out for today?
Well, absolutely. A very good morning to both of you all. Let's first start off with some of the earnings that came in yesterday. We have the first one coming from JK Papers. They reported a strong set of numbers in the third quarter. Net profit saw an uptick of 119% on a year-on-year basis. It has gone up from 150 crores to 330 crores. Revenue saw an uptick of nearly 50% when we look at it, up from 1,094 crores to 1,643 crores. Apart from that, we're also seeing that the margin saw a very sharp improvement from 29.4% to over 35%. LIC Housing, however, reported a mixed set of numbers. If we look at them, revenue came in higher by nearly 16%, but it was the net profit that actually saw a dip of nearly 40%. BLS, on the other hand, came out with a strong set of numbers, reporting a nearly 93% jump in the revenues. They have gone up from 227 crores to 438 crores. PAT, however, saw an increase of nearly 64%. TCPL Packaging also coming out with a strong set of numbers. We're seeing an uptick of nearly 37% on the revenue, while the PAT has gone up by nearly 71%. Balaji Mines has reported a weak set of numbers. We saw that revenue saw a marginal uptick of nearly 4% on a year-on-year basis. PAT, however, has gone up by nearly 18%. But however, in the commentary that came out in the press release, the company mentioned that margins are expected to improve from the first quarter of FY24. They will be spending nearly around 400 to 500 crores as a part of capex. They have already started construction for their methyls amines plant, and that is expected to commission during the second half of the next year. Apart from that, we also have Paytm on our radar. Now, that is on the back of a con call that actually took place yesterday, and we have commentary that came in from Vijay Shekhar Sharma, and he says that EBITDA profitability growth rate could become two-digit in the future and will be sustainable. Regulatory risk management is expected to remain the top focus. Apart from that, Ultratech Cement is also on our radar. Now, the company has announced commissioning of a 1.5 MPTA brownfield cement grinding unit in Odisha, and that has taken the company's total cement capacity in the state of Odisha to 4.1 MTPA. UPL is also on our radar after LIC has gone ahead and cut its stake in the company from 9.2% to 7.2%. And lastly, watch out for Cipla. The company says that the IT department has conducted search at some of its offices as well as manufacturing units. So these are all the stocks that you should watch out for in the trading session today.
Well, thanks so much for that, Vamakshi, but you stay here because you've also been going through all the brokerage notes that have come out today, and talk to us about the key ones, the important ones.
Well, absolutely. Let's first start off with Varun Beverages. Now, as you know, the company came out with its Q4 earnings yesterday, and we in fact have a note that came in from Bank of America. They've gone ahead, maintained a buy rating on this stock, given a target price of 1,530 per share, and in fact, they've actually gone ahead and raised the target price. Now, the company's results were a beat. In fact, they are set up for nearly 34% profit CAGR through 2025. The newly acquired territories are performing well, and they're leading growth. The valuation is also offering room to re-rate. So on the back of that, Bank of America has maintained a buy rating on Varun Beverages. We also have LIC Housing in focus. Morgan Stanley has maintained an underweight rating on this stock. A weak set of numbers that came in, and they've gone ahead and given a target price of 320 per share. Now, what they're saying is that quarter 3 was a weak quarter, and in fact, on the PAT front, the PAT was nearly 55% below estimates. Slower improvement in loan spread actually caused the 12% miss on the NII front. Higher operating cost also cost nearly 17% miss on the PPOP front. Apart from that, lastly, we will be watching out for Paytm. JP Morgan has maintained its overweight rating on the stock, given a target price of 950 per share. Now, what they're saying is that incremental profitability gives a peak on forward numbers. The financial services scale-up remains on track. They've upgraded the profits assumptions, but they've moderated the GMV growth assumptions. So those were all the important brokerages that you should watch out for.
Well, thank you so much, Vamakshi, and do watch out for all the names that she mentioned. Let's quickly move on. Now, quarter 3 has been weak for Novelis. Lower aluminium prices weighed on the sales. Shipments also declined. Now, Ashesha is here joining us with all the highlights. Ashesha, take it away.
Absolutely. Challenging macroeconomic environment and high energy cost impacted Novelis' numbers this time around. Novelis, which is Hindalco's wholly owned subsidiary, reported a decline of 3% on the top line, and that is because of lower aluminium prices that prevailed during the quarter. As far as adjusted EBITDA is concerned, that also declined by about 33% on a year-on-year basis because of high energy cost and high inflationary environment in developed economies. As far as shipments are concerned, they declined marginally by about 3% on a year-on-year basis, and that is because customers reduced their inventory position in the quarter gone by. We have a couple of brokerage notes that have come in on Novelis. Macquarie has maintained an outperform rating on Hindalco with a target price of 517 rupees per share. They say Novelis reported a weak quarter this time around. Recovery outlook because of the weakness that we saw in the quarter gone by has now been pushed further. For quarter, EBITDA was impacted by about 8% on a quarter-on-quarter basis, and that was because of decline in volumes that we saw in the quarter gone by. All in all, weak set of numbers have been reported by Novelis, which is Hindalco's wholly owned subsidiary, and that is mainly because of high energy costs and inflationary environment that was prevalent in developed economies.
Well, thanks so much for that, Ashesha. And Tata Steel also reported, its numbers. Consolidated loss of 2,500 crore in the third quarter. EBITDA is down as well. And recession fears seem to be weighing in on steel prices, as well as margins, of course. So, Ashesha, talk to us about the numbers. Give us a breakdown.
Absolutely. Were expecting weak set of numbers from Tata Steel this time around, but the numbers have been much weaker than what the street was working with. Profitability this time around has been impacted by sharp drop in realizations and decline in spreads in Europe. As far as the bottom line is concerned, remember the company has reported a huge loss of about 2,500 crores, but that is because of deferred tax expenses that the company has booked in this quarter. As far as standalone adjusted EBITDA per ton is concerned, it has increased by about 16% on a quarter-on-quarter basis, and that is because the company enjoyed lower coking coal prices during the quarter. Debt position largely has remained stable on a quarter-on-quarter basis for Tata Steel. We have a couple of brokerage notes that have come in. First up, we have JP Morgan, which has maintained its overweight rating on Tata Steel, and they've given a target price of 140 rupees per share. They say large loss this time around was driven by inventory NRV that was hit in Europe, and the key negative was the sharp decline in Europe EBITDA per ton that we saw in the quarter gone by. Meanwhile, Morgan Stanley has maintained equal weight rating on the stock with a target price of 110 rupees per share. They say European business was a big drag this time around. European business has reported numbers much weaker than what they were working with, and large deferred tax expenses towards pension scheme has impacted the bottom line. All in all, Tata Steel has reported weak set of numbers much weaker than what the street was working with, and that is mainly because of the weakness that we saw in European operations.
Well, thank you, Ashesha. And with that, we're completely out of time on this one. But you don't go anywhere. There's lots more action lined up on the market. Here's wishing all of you a very good day. Thank you so much for tuning in.